It's me, Pavitran here. Today we're gonna do a weekly forecast of crude oil. Before that, what are the levels which I mentioned and what had happened over the last week? Monday was opening somewhere around a negative note. You can see the opening candle at 3:30. It was a red one. After that, follow through at came, and it was started to fall. As we can see that it was in a bearish channel. That was the trend line which we have marked. It was sustaining in the range of 40.50 to 38.70. That was the range. This is the main reason for that is this candle low is somewhere around 38.70. A huge buying order or buying pressure will again come into the market if price tries to cross or the price comes near this region. On testing multiple occasions it can eventually break through, but this is the region where it again and again taken support over that region 39.70 to 50 level. It has taken support here and made a quick bounce of 40.50, again support, again a quick bounce, again support, and this time it has broken and tested the trend line. I was expecting it will take a resistance over the trend line and it eventually fall, but it had broken the first trend line and again tested the second one. And I also hoping that it will fall down eventually, but on a closing basis it was still on the range of between the two trend lines. So that is where we get a slight hint that okay, this is the time we have to change our view to buy on dips, because this was a complete recovery, and you can even say this is a kind of a breakout for this range has been broken, and it was trying to test the resistance over the region. If the low which has been broken of 39.70 has been broken, then we can consider this as an the bearish channel is intact. But this is a place where it had made this first higher low. This is the first higher high, and this is the first higher low. From here it formed a new higher high. Again it started to reverse from here, so we can mark this one as a first higher low. This is a second higher low. This is the first higher high, and we have to wait and see where the second one has been forming. So if you can move through on Wednesday or Tuesday, we can see a new higher high has been made. So it's a kind of an market sentiment is turning into bullish mode. Higher low, second higher low, first higher high, this is the second higher high. So it's clearly evident that market has turned into an bullish mode by breaking the trend lines on Tuesday. On Wednesday, it is very obvious that we should be clearly on buy on dips. At 11:30 itself, a market tried to give us a break on upper side. It started to rally after all the way. I was expecting a bearish divergence to happen up around inventory. Inventory might be somewhere around. I was expecting market to push further up near to $44, then a drastic fall from there. But to my surprise, that market continues to be in the range bound movement and then made fall from there. I was not expecting that. I was expecting a bearish divergence to form and later on a market to fall. And still on Thursday too, I was expecting some buying pressure in the market, solely because it's a kind of a retracement for me. It's not a huge fall, so I was expecting some kind of buying pressure to creep into the market. My level which I mentioned to turn into bullish mode is 42.50. This was the level. And on a daily basis, if you're trading on daily basis, still a daily candle close has not been happened on this region. Whenever market tries to rally above 42.50, it goes up and then the sellers are pushing the market down. So we can see a lot of wicks over that region. On Friday it was a kind of a range bound move. It was completely sideways on this 18. I was expecting a buying pressure over there. I went in long on the retracement candle and kept a stop loss of 18 candle low that was somewhere around 41.40. It got triggered. That was my bad luck. And my Tuesday entry was I bought at 17, somewhere around 41 75 or 80, I can't exactly remember that. The low has been the 1630 candle low, somewhere around 41.60, maybe around 15 cents over that region. And on this day I was expecting a sharp recovery. I did not read any of this. I missed all these. I was waiting for a short opportunity on the top. Even that did not happen. After that, market had fallen. On that day, I did not get any trades. On 4th of August, I took a trade. I went long because of this rally. I was expecting some buying pressure to come in at 7 o'clock. That's around American market opening time. So before that itself, it gave a good green candle. So I was already in buy. This green candle is giving me another confirmation to go long. And I was expecting a retracement on 7 o'clock, that was American market time opening. I was expecting a retracement over that region, somewhere around my buying point. My first lot was somewhere around 40 and $40.40. That was my limit order I placed over that region. But the market turned from 53 cents itself. My only one lot got triggered, and I was rallying with only one lot. So after that, it was clear obvious that it's clearly a buy on dips market until now. Friday and Saturday it made a sideways movement. So what are we expecting on a coming week is that right now it's still in a kind of an bullish channel. Nothing has been broken yet, so we have to wait and see how this channel takes on. If you can draw the trend line over that region, it will be very clear that it will still take the support over that region. Let's see how this goes on, and we have to wait and see. And maybe even this channel might be in existence. It is very obvious that it's kind of a forming an higher high and a higher lows. It's a kind of a range bound mode over here. Until this trend line is intact, or even this low is intact, maybe around this is the origin of the rally which has occurred. Maybe 40.4, maybe $40 level will be a crucial one. Or 40.10 level will be crucial, because as you can see, this is the place, or this is the level which then rally has been originated, the bull rally. Or we can even say, this is the place which has originated, maybe around 39.70. But it's a kind of an testing the trend line. This is the place where actually it had broken the trend line. So you have to give more preference to this region, a $40 level. Maybe 40.10 to 40.20 will be the crucial level to watch out for this week. If close below that had happened on a 4-hour daily candle, then we will again see a fall in crude oil. That won't be a big fall. It will start to fall slowly, and after that, if some of the news or some of the events might get triggered in, and then the fall will be drastic enough. um as far as RSI is concerned, just we'll look into it, how this is going to perform. So on a daily basis, RSI will be in yeah, RSI is starting to take resistance at 60, but it's recovered nicely from 55 region, so starting to take a resistance at 60. So let's see how this goes on. Market is completely in sideways, and there is a lot of divergence has been forming. And we can clearly see that red candles has been starting to form, and 42.50 level a candle close has not been happening since then. If you want to be a complete buyer, you have to wait for a candle to close above 42.50 levels on a daily candle basis for further bull rally to continue. Till then, every rise will be a falling opportunity. On an intraday basis, it's still in a bull ride. The zone has been clearly in a bull zone. Apart from that, Only for Tuesday, oh sorry, only on Thursday and Friday market has been a complete range bound. On the remaining days it was a completely trending day. So let's see how this week goes on. Until $40 level is intact, we will see some quick bounce on this level. If that level gets broken off, then we might even test 39.70 level. That was a place where big buying orders came in so fast along. It has taken the market to 40.50. So it's a kind of nearly $1.5 push from the market from the bottom level. So this level might be a very key one, 38.70250. Just to look out for that level. And the second level apart from $40 level is 39 point of sorry 38.50270 level. Once that gets broken off, then 37 and 35.80 will be on the cards. We have to look for market sentiment, whether it is forming a higher highs or lower highs. You should be looking out for that. And on a top side, as usual, 42.50 close on a daily basis needed. If that occurred, then the new high has to be breached for market to still continue. This is the third higher high. This is the first one, this is the second one, and this is the third higher high which has been formed. On higher low, this is the first one, maybe around 3rd of August, first higher low. This is the second higher low. So we are considering this to be the third higher low. Now let's see whether market has an ability to push or to sustain above 43.50. If it sustains above that, then the bull channel is still intact. If not, then we have to wait for a new lower low and lower high channel to form. This is the level you should be watching out very carefully. On upper side, 43.50 will be a key, and lower side $40 will be a key one. So come this week, range will vary from $40 levels to 43.50. If any of the levels gets broken, then there is a more possibility of some retracement, and after that rally towards that side. Let's see how this goes on. Thank you.